Hello everyone. Welcome back to another video. I hope you're all doing well and having a fantastic day. Without further ado, let's jump right into it. The last 3 weeks have been very strange. If you haven't been following the news in the cryptocurrency space, something unusual has been happening. Historically, banks have stayed away from the cryptocurrency space, or at least that's the narrative we've been given. The original idea was that banks would never enter our space and would always find ways to talk about us negatively. This attitude still persists to some extent. With the creation of XRP, the idea was to offer a modern version of Bitcoin. If banks were hesitant to deal with Bitcoin, XRP would provide an easier alternative. Instead of working against the banks, as Bitcoin developers did in the past, XRP aimed to collaborate with the existing financial system. In the past month or so, we've been receiving a lot of banking news, which caught me off guard. Typically, any banking news we got was negative, like a bank criticizing Bitcoin on TV, making it the top news story of the day, similar to the frequent Jamie Dimon headlines. However, where we are now, at the time of making this video, there's been a noticeable increase in banking activity within the cryptocurrency space. Many banks have been accumulating crypto over the past 6 months, which is quite unexpected given their historical stance. So, if you've missed some of the recent developments, let me catch you up on the numbers. Banks like the Bank of Montreal, JP Morgan Chase, Morgan Stanley, a few large banks in Germany, and one in Switzerland, along with several gigantic investment firms, have been active in the cryptocurrency space. For instance, one of these firms purchased approximately $180 million worth of Bitcoin. This news made it to popular headlines, but perhaps not for the reasons you might expect. I verified the news through multiple sources to ensure its accuracy, and after further investigation, I realized many people missed the core story. I need to preface this by saying that many articles on this topic are written in a somewhat exaggerated style. I often see cryptocurrency articles using overly grandiose language, which started becoming more prevalent about 1.5 years ago, particularly with articles about Cardano and Hoskinson. So, let's dive into it, and I'll explain the real situation. Most articles focused exclusively on Ripple and XRP, but there's more to the story. In a new development that has sparked widespread reactions, the Basel Committee on Banking Supervision, BCBS, released a report from various banks. Historically, there have been several key events, but the recent news is particularly noteworthy. I'll break down what's actually happening beyond the headlines focused on Ripple and XRP. The report from the BCBS highlights significant banking activity within the cryptocurrency space, which includes the accumulation of crypto assets by banks over the past 6 months. Reports and surveys from governments used to be our primary source of information about the cryptocurrency space. The central question was always, is Bitcoin a threat to the traditional financial system? From around 2014 or 2015 until about 2020 or 2021, the answer was consistently no. Bitcoin wasn't considered big enough or widely used enough to pose a threat. However, in 2020 and 2021, this narrative began to shift. Suddenly, the answer became yes, Bitcoin, if it grows too large, could indeed pose a problem for the traditional financial system. This shift is why we now see politicians worldwide pushing back against Bitcoin. It's not that they don't understand Bitcoin, they do. They recognize that, given the current rate of adoption, if this trend continues over the next decade, the majority of the global population could be involved in the cryptocurrency space, which poses a significant challenge to the existing financial system. This brings us to another important question. Who is using Bitcoin? Who is buying it? And who is actually involved in this space? We've seen surveys targeting wealthy institutions, such as family offices, wealth management firms serving affluent families. These surveys often ask how many of these families are diversifying their portfolios with cryptocurrencies to increase their wealth. The big question now is, how many wealthy families and institutions are actually involved in crypto? Recent surveys show that around 75% of wealthy families are already into crypto. About 15% prefer traditional assets like gold and bonds, and the remaining are interested but still cautious. Now, let's talk about the broader financial landscape. Entities like the Bank of International Settlements, the Basel Committee on Banking Supervision, and the International Monetary Fund have been looking into this. Historically, banks were not involved in the crypto space. The narrative was that crypto was for enthusiasts who favored decentralization, while banks stayed away. This year, However, we've seen a shift. The Basel Committee on Banking Supervision released a report highlighting significant crypto involvement by major banks. According to the report, XRP is among the most popular crypto assets attracting investor interest. Every article I found focused heavily on this, but there's more to the story. Jack the Rippler, an XRP advocate, broke the news on Twitter. 19 major banks worldwide reported a total crypto exposure of about $10.27 billion. This is a huge revelation considering that, for years, we heard that banks had no interest in crypto. These are not small banks. These are major world banks. The fact that they've accumulated such significant amounts of crypto over the past 15 years in relative silence is astounding. This indicates that Bitcoin is no longer just a niche interest. It's mainstream, with some of the richest people and institutions now actively buying Bitcoin and other cryptocurrencies. They're finding ways to accumulate without significantly affecting market prices, which is why we often hear about these investments only in passing or through drips of information. To sum up, 19 major banks owning $10.27 billion worth of crypto is a game changer. It shows that even as these banks publicly express skepticism or negativity about cryptocurrencies, they are secretly accumulating large amounts. This dual stance, public skepticism but private accumulation, reveals a lot about the future of cryptocurrencies and the financial system. It's essential to pay attention not just to the prices, but to the broader trends and the quiet moves being made by major financial players. This understanding provides insight into why predictions about Bitcoin's future value, like reaching $1 million in a few years, keep surfacing. These major banks' exposure to crypto could be just the tip of the iceberg, with many more quietly building their portfolios. Sure, here's a rewritten version of the transcript. There are shell companies nested within other shell companies, and the structure goes on and on. These entities have funds distributed in various ways that often don't show up on their official balance sheets. This discussion involves just 19 banks, not to mention the next 800, 900, or even 1,000 banks worldwide that also have exposure to Bitcoin. The media often focuses on BlackRock and Fidelity's exposure to Bitcoin, ignoring the other 7 companies or the additional 15 ETFs globally, as well as ordinary market participants. The accumulation levels are staggering, yet the news coverage in the crypto world is exceptionally narrow. Narrow isn't even the right word. It's incredibly restricted. Reports mention 19 banks accumulating crypto with a combined exposure of $10 billion, but they exclusively talk about XRP. When I show you the numbers, you'll see why this focus on XRP is misplaced. The figures extend far beyond that single cryptocurrency. These 19 banks have considerable exposure to crypto, with XRP being highlighted as a significant investment choice. However, the Basel Committee on Banking Supervision, BCBS, a globally recognized banking committee comprising central banks from 28 jurisdictions with 45 members, is responsible for assisting national banking and financial market supervisory agencies in adopting a more unified regulatory approach. Sometimes I feel like I'm taking crazy pills, as depicted in the movie Zoolander. If you haven't seen it, it's very funny, though part 2 was terrible. I often feel this way not just in the art and real estate markets, but especially in the cryptocurrency space. Despite my efforts to disseminate accurate news, the complexity and narrow focus of crypto coverage can be incredibly perplexing. I'm not a miracle worker or a crypto whisperer, but I do my best to share the information available. Sometimes, it feels like there's just no way to break through the noise. There is no scenario on this planet where I think I will stop paying attention to this market. I dare not even use the word bullish because I think I'm far beyond that. For me, bullish means you don't really understand what's going on. You just see some numbers on a screen and think, yeah, bullish. Or you see the prices go down and think, bearish. No, I think I've transcended that mindset. They're not buying Bitcoin to sell quickly for a small profit. They're in it for the long haul because that's where the significant money is. If we look ahead 5.5 years, even a $500,000 Bitcoin would be